What does the week jobs number mean for markets? Hi, everyone. I'm Maggie Lake, and kicking off his Friday residency in the market house is Dale Pinkert, trading coach at TradeGateHub. Hey, Dale, how are you?
Hey, I'm a resident. I'm wondering when you'll bestow my doctorate upon me. How long do you have to be a resident at your
Well,
at
we
your
were
market hospital?
we were thinking more. Sorry for some reverb there. We were thinking like King of Vegas residency. That's what we were
Okay.
thinking.
All right. Well, it's a cool name.
The
You know.
exactly the kind you deserve.
Okay. So
That we're
it's good to be in the house. We'll
it,
we'll put it that way.
we are happy to have you in the house. And hi to everybody joining us live on YouTube and Substack. Great to see you as always. Drop your questions in. We'll get to as many as we can. And I know you always have a ton for Dale. And it's so great to have you here, Dale, on the Friday jobs report. So this monthly jobs number came in weaker than expected, 22,000, only 22,000 jobs added last month. We saw a big move in treasury yields, the 10-year at its lowest level since April, big drop in mortgage rates. That's going to be good news for some people. The dollar fell, stocks weakened, gold's up. So what did you make of the market reaction? How are you thinking about things here?
I think the most unreported story is the recovery in the bond market. Now, everyone's talking about it, but when we came in Tuesday, there was a bloodbath that started in the UK because of a cabinet shuffling, and they were killing the gilts, they were killing the JGBs, rates were making new highs everywhere, all over the world. The gilts were getting hammered, and TLT gap lower. All right, so this is Tuesday, and tell me this was only a 4-day week, but from Tuesday, if you before you saw the next day's action, you would say, "Hey, is this the moment, the sovereign debt moment?" Because we could have broken down. But the way they turned this thing, and now we're back at major resistance. To me, it looks like an ascending triangle, and the breakout from this formation is going to take it up towards 93, 94, because it's 83.5 to 8.5. So 5 on top of that is 3.5. So Donald Trump had a good week in his bond portfolio.
Yeah, I think that probably pretty relieved about that as well.
Remember, we were talking for a long time, and you brought it up. They get their way about almost every market and things that they wanted, and their big goal was to get the 10-year yield down. And we thought, they'll probably get that too. Well, they're getting it. It's at the expense of some fear of an economic slowdown. And, Maggie, even though I think that, S&Ps can trade over 7K, I think, we're with an intermediate term correction. I think the market's okay until next spring. But that doesn't mean the economy is okay. All right. So, but what's going to happen with rates is going to be jet fuel for the melt up stage. But I think right now, for the first time in a while, fund managers are going to be thinking about, well, yeah, the bonds made a nice move. They look good. They're going to go for a while. What's the reason? The reason is the employment picture is barely positive now with 20,000. It's still growing, but we got used to 6-digit numbers, and the path that it's on, it's looking like it could head to negative numbers. And
Yeah.
I think so. I was interviewing someone the other day, and someone said to President Trump, well, it looks like you're going to get your way. The rates are finally going to be coming down. And his answer was, it's too late, which my guest found pretty interesting.
Yeah.
So bonds look good, and strange bedfellows with bonds and gold going up, but I wouldn't be short the bond market right
Yeah,
now.
we're in strange times. I think that so talk to me that S&P target is interesting. I know you
What a
look at
beach ball.
SPX. You have to share your screen too. I don't think. Yeah, there we go. So what are you looking at for SPX? What does that mean?
Okay, so we had a pretty negative day, and I wanted to remind viewers, listeners, that we're in the eclipse season. We have a lunar eclipse, I believe, this weekend. And I've seen many turning points during eclipse, and I've talked about eclipses here before that have caught turning points. And it's very possible that we're putting in a high into this lunar eclipse. But to have price confirmation, look at where we were Monday when the bonds were getting cracked. Okay, we held this support level. Okay, so under this support level was going to break a rising wedge. So now I could move up to today's low, under 464.40 is going to be a breakdown of the wedge. And here's the wedge. And I have a couple of targets depending upon the size of the wedge. So the smaller wedge starts here, right around 6,200. And that would be the target because that would be 100% retracement of this smaller wedge. And then I have a bigger wedge that's anchored down here at about 57.5, which would be some type of fib retracement and a healthy correction that would set the stage for the melt up. So I'm looking for one correction. Maybe it's into the solar eclipse and the equinox coming up later in the month or early October. And we get a flush and it's either 6,200, 59 or 58 down here. And then we have a melt up. But some of the leadership is definitely vulnerable. And normally you could say that where NVIDIA goes, the market will go. So NVIDIA looks pretty weak to me. I had all kinds of distribution signals up here. We've had a weekly reversal. We actually gapped lower. There's nothing positive here on the weekly chart. It looks vulnerable. Who's short? Maybe we get this pullback towards 140 or 155. That could, I think, create a correction to the downside in the market if NVIDIA had that type of fall. So I think that this is an important chart for the whole market, and this doesn't look bullish to me. And even though the S&P made its second new higher high this week, NASDAQ hasn't made a new high. So we have, here's the old high in NASDAQ. We tried it today, but we've had two successive higher highs in the S&Ps in the last few weeks. Okay, so we had one here where the NASDAQ didn't make a new high, and we had one here. So this 64.40 level, take a picture, would take us back down to 63.60, which if we take that out, you're talking about 140, 180. That's the previous all-time high, which would be a natural point for this correction to go to. Test previous all-time highs and then run again as rates continue to ease.
Yeah, so it's interesting. A couple of things you said really interesting, and interesting that NVIDIA's weak, but Broadcom's up a lot today, right? So as you say, there's some worry overall about tech, but we do seem to be seeing some winners off of the back of earnings, and
there's rotation.
Rotation, right? Can we see a situation, because you're talking about that melt up, driven by this? We're all expecting the Fed to ease. This payroll number probably gives them cover for that if they weren't going to already. Can we see bonds rallying, stocks rallying, and gold rallying at the same time? Does something have to give, or can we see a short-term period where they're all moving in lockstep?
They all have been moving in lockstep, except bonds. I mean, I really don't see that much of a difference in, what's happened in S&Ps and, what's happening in gold. Look at, there's the S&Ps, right? Nice solid uptrend from April. And gold, nice solid uptrend from April right here. So I mean, they're both going up together. Everything's going up together, and they're not going to turn until we get a turn in the dollar.
I just was going to ask. I know that the dollar is very important here. A lot of you talking about the fact that we've really got to keep our eye on currencies. What are you looking at for DXY?
All right. So last time I was on, I got bullish at 96. That was the low. We had a nice rally. It was a great trade. Here was where were we? The 96 low. Let me go back to here because I marked it on the chart when I was here. So this was the 96 low. We had a nice little ABC. I forgot what this number was. I think it may have been that awful number from BLS that got that lady fired.
Mm.
I think that was it. And, so the, yields came down, dollar sold off. The dollar's trying to make a stand here, but I'm opening myself up to one of my favorite formations is a 3-drive formation, which Ellioticians would call an ending diagonal. So if we have an ending diagonal, we could trade all the way down towards 94, get maybe a 120 euro up towards that range, and then have some type of dollar peak. I think we're closer to a high in euro than starting to launch, because I am looking for this next low in the dollar, should it materialize, to put in a significant low at 94 or so. And I think that's when everything that's been inflating begins to deflate. So looking for short positions in euro. We should take out this 118.30 level, had a confirmed high. And then I think we could talk about a dollar bottom. But I think at sometime this month, maybe later in the month. I'm figuring around the solar eclipse. I've seen the dollar be eclipsed as far as turning down, and also have seen lows around solar eclipses. So I think that's going to be a real important time frame. And for euro to trade 120, you could do that in a week or a few days. I mean, we're at 117.18 now. I'm not as bearish the dollar as I was when I was telling people to buy the euro at 102 or 110 or even 113. But this is not the time to start thinking about a dollar crash. I think this is the time to start thinking about if there's some type of economic weakness coming in, that the dollar is going to have a bid, and I'll hold off why I think it's going to have a bid until I think one of the segments that you want to show that you talked to me about earlier.
Yes. So I'm not sure that we talked to, I'm gonna run a couple, because I love to sort of bounce some of the things we've heard all week off of you. We all do, and see if it sort of lines up with what you are seeing as you look at the charts, because that's a great thing to do, right? Sort of you hear a narrative or a fundamental story. Is it lining up with what you're seeing in price action? We had Julian Brigden on Wednesday, as many of you know. And first of all, very interesting, because he's very bearish the dollar. He thinks we're in a downtrend, and that it is the end of American exceptionalism, and that everyone's too long stocks. And so, sort of I think maybe a little bit different to what you see, although time frame may matter, because I think he's looking a little bit longer term. But the other thing he was talking about was gold, this record run. He really favors hard assets now. And I just wanted to get your thoughts on some specifics that he was looking at. So hopefully we have that clip and we can run it.
Right. So I was looking at, one of my favorite, to use if I may, chart porn charts that I have, right, is I like to look at XLK, which is the tech ETF, divided by XME. And if you do that on a log chart, you will see that we just blew through a downtrend. So in other words, XLK was outperforming the mining metals. We just blew it through a down trend that basically has been going since 2009, right? And it's quite a well-defined trend, and we've just blown through. And you forget that this is a logged chart, right? So when you look at the side and you're like, well, how far could this thing go? And the answer is, this could be like, if we go back to the highs of where we were in 2008, then this thing is basically a 12 bagger.
I love the way he says bagger. So Dale, that ETF, XME, is metals and mining, and he's keen on both. Are you watching the miners? How are you thinking about the price action in gold here?
All right. Well, first of all, a picture speaks 1,000 words. I'd recommend to every guest, if they're going to describe a chart, it's a lot harder to describe the picture verbally than to put it on your screen. So
Yes,
we could take
and
a look at it.
we'll take the fault for that because we didn't have him keyed up to screen share like you do. But
All right. Anyway,
it's
it's hard to comment on something I can't see. I guess that's the point. But as far as miners are concerned, they've been stars. Okay. But I look at gold right now that we're close to completing some moves. $42 silver, I think, is a target that's been out there for a while. I'd start talking about it, I don't know, a little late, maybe around 35, 36 about a month ago, and gold at 33.30. I said 580, but I could see 680. So I think we're close to the end of this wave. And it's a fifth of a three, or it's a five of five, but I don't think it's a good time to be chasing precious metals. In fact, just like stocks, they rotate in different sectors. I would look at not the euphoric commodity markets that you can't find anyone who is on the other side of the trade to look at things that are out of favor for their cycle to begin. So I think that if you're patient and you don't care about missing the last, 10%, 5%, whatever it is, that you'll have better levels to buy in the miners and the physical.
Very interesting. Okay, so maybe, don't chase the high here. Should we be worried about a sort of large decline or downtrend? And I'm going to share another clip, which is why I'm thinking about this. And that is a conversation I had with Michael Cow. Now, as I mentioned on Wednesday, we're rolling out a few new shows, and one launching next week is called For the Record. And in that show, the idea is we're going to zoom the focus in and discuss a key question or a concept that we've come across that we think deserves more airtime, deserves sort of really getting in there and unpacking. And our first guest for that is Michael Cow, who has been warning that we should all beware the peace black swans, which is really interesting given all the video we've seen of Putin and Modi and Kim Jong-un in China with Xi, and we have Trump tweeting about it today. It just seems like we're sort of, stuck in this permanent conflict. But what happens, even though it's low probability, if we get a surprise around peace? And Michael made a really interesting point about thinking about what can happen in the price action around gold. Let's listen to what he said.
Let's put it this way. If all of a sudden you see this unexpected peace between Russia and Ukraine with sanctions being lifted on Russia, it would not surprise me if you see geopolitical risk premiums of these safety trades go out very quickly. So gold is, again, very, very interesting to me because, I've seen all these charts about how, gold is now rivaling, U.S. Treasuries in terms of a percentage of central bank reserves and whatnot, right? But I always like to say the sword of supply inelasticity cuts both ways, right?
So that was such a fascinating discussion. We also touched on what Michael talks about as the reverse Marshall Plan that airs next Thursday for founding members. So if you're not one yet, go to Substack and sign up. Really interesting to sort of think about the unexpected and kind of make sure we're prepared. But Dale, I know you have so much experience in this space. Talk to us a little bit about commodities, because when Michael said that, I remember people saying, yes, they can go parabolic up, but they can also rip your face off on the way down. Do you feel like gold's just not worth chasing, or are you worried there is a risk we could see some event that causes people to want to reverse out of that quickly? Do you see downside or just less upside?
Well, wave 5 is the final wave of a structure. You don't know if it's the end of 5 of 5 or it's the end of a third wave and we get a pullback. That's what I favor. But I don't think it's going to be a peace deal because I believe that China's interest is in the war continuing to continue to keep America's attention there in case they want to do something this fall. You don't build an army like that we all saw in the parade unless you're going to use it. Okay, I don't think it's a bluff. So anyway, so there's that, and I would say that the Europeans aren't really, working towards Ukraine giving away land and just getting peace at any cost. And they're talking about putting peacekeepers on the ground in Ukraine, which is going to be an escalation. So I really don't see peace breaking out in Ukraine.
Yeah. And to be fair, Michael doesn't either, but he's just always thinking about like those low probability. You don't know what a black swan is, right? But it's a good exercise to.
How about some of these central banks that Russia's having a currency crisis, right?
That's another issue.
Like
that
Turkey, why don't maybe they have to sell some gold? They have plenty of gold. So if any news hits the wire about any central bank selling, 1,000 ounces of gold would panic people. It would panic people. So there are a lot of things that maybe just a whiff of deflation and bonds looking more attractive to have the yield instead of buying expensive gold at 3,700 with no yield. And most of the capital gains for now might be behind it because, who doesn't like gold? So what I'm doing is I'm saying, you know what? You can't eat it. You can't eat gold. All right. And I know I've talked about the grains before, and it's taken a long time, just like the cannabis stocks took a long time before they came out of the hole. But the grains, in my view, on the weekly charts, and now some, especially corn and beans, have turned good on the dailies, and wheat is trying to turn here. And, they're down at least 50-60% from the highs on the invasion of Ukraine. And there's drought talk in the breadbasket in Ukraine. And if things escalate, it may not be as easy to get grain out of there as things escalate between Ukraine, Russia, and Europe. Food could be used as a weapon. So I'm saying take a look at some of these long-term charts. I could put up a few. I like the corn. And then another out-of-favor commodity is natural gas, which is something we talked about last year. But first, here's a quick look at the grades. Quick overview. Here's the corn market. This is a daily. So we bottomed about 380. I would buy pullbacks, do your fibs, 50% back, buy pullback at $4. But look how long term we've had a huge base in corn for quite some time. So you have to see this, how long and where we were back in Ukraine. We were $8 corn. Now we're half of it. And the RSI is crossed. This market is going to rock. Beans, trying to bottom here. I think we have bottomed. I'd buy a pullback maybe around $10, big round number down here. 10, 10, 10, wrong under the low of the move. We could see where beans have been, where they were $15. Okay, so a lot of upside there, and a lot of upside in the wheat. The wheat was $14, and now it's $5. So I like the grains.
Dale, let me jump in, because some people, I know you're very skilled at trading all of these individually. Does it work as well if you do a broader ETF like DBA?
Yeah, DBA. Yeah, you're not going to have the same beta, but you're trading the same theme. You could even buy fertilizer stocks. And while I'm talking about fertilizer, I have some sharp viewers because they were watching my broadcast and they said, well, Dale, you like natural gas and you like corn, and they need natural gas to make fertilizer. Okay, so there's demand for natural gas for fertilizer, not just the electricity to power all the data centers running AI. So I went back and looked at what we did last year, and I think you were talking about Doomberg. Also
Doomberg.
had the same. He had the same story about we need a bridge for electricity between nuclear and what we have now, and natural gas is the bridge. And this is where
Doomberg, by the way, is in the chat. If you have not read that piece on his Substack, or you're not subscribing to his Substack, you must, because it's so important. And the story has only gotten more intense. As you know, I told you all I was at the energy conference, the Reuters energy conference. It's all we talked about. So go check that out. But you're absolutely right to point that out. Dale,
well, let me finish
that
here, though.
gas chart if as you continue to talk about this too.
Can you see it?
You've mentioned this several times, that you like the way this looks, and it's been so low for so long here.
Yeah. So let's see. Stop screen. I don't know why I have to.
No, it was up a minute ago. You had it up. Now you just took it off.
All right. Okay. So I'm looking at the weekly. So if we go back to when the story first started, it was back here. Okay, it was in 2024. So it was over a year ago. And this was a very nice move, up to 5. So what we're doing here is we just corrected this first advance and corrected 50%. We had his first nice up week in a while last week. And we could have a fib extension of this move, which was $3.50, which would be about 5. So I think I'm being conservative, looking for 6 to 7 in that gas. I think we're going a lot higher, especially if there's a bad winter in Europe and there is not peace with Ukraine. There could be some problems with heating and natural gas supplies.
I want to. We're gonna continue to come back to that story over and over again. I think I did want to talk about cannabis. You mentioned it, and I'm writing everything down, as we all do when you're on. When you get a feeling about these, Dale, because for those of you who remember, Dale mentioned cannabis. He was the first person who'd said anything to me about it in a very long time. We used to get questions all the time. And I think it was almost the next day, Dale, that sector just took off. I mean, your timing was impeccable. What are you seeing now, though?
Okay, well, if you missed the first wave, and there were a lot of different ones. This is the ETF, though, but it was a triple. All right, so I think that there's a possibility. I think some people are talking about. What is it? Instead of rescheduling marijuana, to deschedule it. And that would be a bonanza for the marijuana industry, because if it's descheduled, everyone's going to get into the business. All the beverage companies are going to get into the business because they have no hoops that they have to jump through anymore. It's like alcohol. Okay, it'll be just like alcohol. So a lot of longs are hoping for a descheduling. As a technician now, I think that maybe there'll be some disappointment about when it's going to happen, or maybe it won't happen, and you have to buy a sharp break like Moss down to about 3.25. So I think there's a possibility that we get a shakeout move with some disappointment here. And you buy this pullback. I don't think we're going to see these lows again. So you buy a hard break, and there's lots of different ones out there that you trade. But in ETF, at least you don't have to do all the due diligence that you would have to do if you're looking at like Green Thumb or True Leaf. They all look pretty much the same. But buy a big break if it happens. That's what I would do with cannabis.
Fantastic stuff on that. We have a question from Dr. Dan. Where do you think TLT could max out at with current environment and potential rate cut?
Well, I'm not a big bull. I still think that this could still be part of a Bear market rally, maybe it's got 102 in it. The bulls are looking for 120, but it's a positive week. You just take it a step at a time. But the first measured move, as I said before, is 93, because it's a 5-point formation between 3.5 and 8.5, and you just add on 5 to 8.5, and it gives you 93.5 right here. So it would still be beneath these lows. But it's still a big move from here. That's up here.
Fantastic. And Cool H&L is asking, what does Dale think about silver?
Okay.
You mentioned this before, but we can circle back to it.
All right. So silver's starting to act a little weaker than gold. I think that the gold-silver ratio is due for some type of turn and correction here. I think silver is going to have a hard time doing much better than $42, $43. And if you just take the same comment I made about gold, about not getting in with all the euphoria, I think you could see $34 silver again at some point. And then if it takes out 34, you could see it even deeper. Gold, why can't we pull back to 3,000 again? I know it sounds like, something amazing, but what if we have a deflationary period where, and that's why rates are coming down. That's why bonds are rallying, because we're de-risking. So I think that I would just be patient. The physical that you own, I don't think you trade it. The last trade recommendation I made on that was to exchange your gold for silver when the gold-silver ratio was up in here. And that's been a big trade. But now I think we're going to correct this trade. Maybe get a big rally back on the gold-silver ratio. Because think about it, if rates are coming down and there's starting to be a fear of economic weakness or recession fears, silver is an industrial too. So demand-wise, there could be, just a short term, $34 sounded expensive a year ago, right? So $34 is now a bargain. So be patient, let the markets come to you, and if they don't, write this down on even a piece of paper and put it on your workstation. Next. Okay? So don't dwell about missing trades. You're going to miss trades every day. I do. So why don't you just say that? I'm going to miss trades every day, and that's okay, because there's always another trade. And give yourself a break and have some longevity in this business without going through, beating yourself up about would've, could've, should've. Don't live in would've, could've, should've land. Okay? Next is the key word for you in life and in this business.
Amazing. And that's why we call him the coach. Dale, fantastic stuff as always. Such a delight. We're excited. We're going to see you next Friday. Thanks, everybody. We made it through the first week of September. This is a crazy month. Who knows what's coming up, but really fantastic stuff. If you are not following us on Twitter, we have the Market House Twitter handle now, where we're going to be posting things that are coming up. So please go follow that, as well as following me. You can follow us both. And we're going to have Tommy Thornton on Monday, which will be a lot of fun. He said everyone is raging on him, so that should be really interesting. So
he's great too.
He's so good. But fantastic. And JJ said, I love Dale's words of wisdom at the end of every episode. It makes us all feel good. Feels like we need it too. Dale, thank you so much. Thanks to everybody.
Maggie.
Have yourself a wonderful weekend. We will see you back here on Monday. In the meantime, take care and good luck out there.